Have you ever been stuck in property research mode for months, not able to make a decision one way or another? Don't worry, you're not alone. A lot of property investors find themselves in this analysis paralysis mode, but there's actually a bit of maths that can help you get out of this and finally pull the trigger on an investment. If you're new here, welcome. My name's James, and this channel is all about helping you build and grow your knowledge about property investing, all without gimmicks or unrealistic promises. I'm the co-founder and managing director of a property investment business called Freighter Property Partners, but this channel is all about your education. If you like the content, don't forget to hit like and subscribe to the channel, but let's get started. So the maths we're talking about to help you make a decision has a name, and it's called the optimal stopping problem. It's essentially a bit of maths that will help you make a decision on a property and give you the best opportunity to get the right investment property for you. So we're looking at an example on how it works outside of property, apply it to property investment, and hopefully we'll get you unstuck from this analysis paralysis. Let's say you're interviewing people for a secretary job. Usually, when you're interviewing for a role, you'll interview a number of people and compare and contrast the people to make sure that you hire the best person for that position. But what if you couldn't look at multiple people in parallel and you had to either offer or reject a person before looking at the next? Then what would you do? Obviously, it could be a little bit naive to offer the first or second person that you interview. So how many people should you interview before you offer someone? This is similar to property investment because the likelihood is you're not looking at 5 or 6 deals at any one time. You're making the decision, should you offer on that property, yes or no? And if you don't, that property could go off the market. The optimal stopping problem essentially says that you need to look at 37% of all candidates, or in our case, properties, and then make an offer on one property. So how does it work? For our example of hiring a secretary, you would have to decide how many people you're willing to interview as a whole. Let's say that you've made a decision that you're willing to interview 20 applicants for the role of the secretary. What you would then do is use the first 37% of applicants as the research phase in your search. This essentially means you're not going to offer any of the first 7 people this opportunity, but you'll need to use it as benchmarking to see what good and bad looks like in the current market. Once you've completed all of the first 7 research interviews, you would then offer on the first applicant that is better than the initial 37%. This statistically is the best way to maximize the chance of you getting the right applicant. When it comes to property, it's exactly the same. Decide how many properties or how many deals you're willing to review. Use the first third as a research phase and don't put a single offer on any of those properties, and offer on the first property that beats those first 7. Obviously, this isn't an exact science. It's maths that will hopefully help you pull the trigger on a deal when you see the right one for you, but it's not a foregone conclusion. This is obviously because you could be outbid or lose the property to another buyer, or market conditions can change in the time that you're doing your research. But the principle still stands. If you're struggling to make a decision on an investment property, this should help you get unstuck and finally invest in the property. The longer you put this off, the more money you could be losing in terms of capital appreciation and return on your cash that's just sat in the bank getting eaten away at by inflation. So how do you do it? First, set a limit of the number of properties you're happy to view or the number of deals you're happy to review before buying an investment property. That could be 10 for some people, that could be 30 for others. Use the first 37% as a research phase, but do your due diligence. Don't just half-ass it. Make sure it's something that you've reviewed fully, so when you do see the right deal, you can compare and contrast properly. 3, act decisively. When you find the right deal, make an offer and make sure you're direct with that offer rather than putting it off for a few days. In the current market where certain people are uncertain, it creates more opportunity for you to get a good deal. So if you act quickly and you move decisively, the chances are you could be successful. And 4, avoid perfection hunting. There's no such thing as the perfect deal. This is about making sure that you feel confident that you've done enough due diligence on the market as a whole and you know that this deal is right for you without putting things off time and time again. Remember, property is about making informed decisions based on data and information you have available. It's not about trying to find so-called unicorns. If you're always looking for something better, you'll miss out on great opportunities time and time again and cost yourself thousands and thousands of pounds. But that is it for today's video, so I hope you found it useful, and if you have been stuck with analysis paralysis in the past, give this a go, see how you get on, and I'd love to hear how it works for you. But thanks very much, and I'll see you in the next one.